This is Richard Flax at Moneyfarm with our regular monthly update, recorded on June 29th. June was a pretty busy month, and there's quite a lot to discuss. Overall, it was a fairly stable month for financial markets, with global equities and global government bonds virtually flat through June 26th. Commodities have been relatively weaker, driven by lower prices for gold and oil. In terms of geopolitics, we saw some signs of de-escalation in the Middle East, with a memorandum of understanding between the US and Iran. That de-escalation has been getting tested over the past few days, but so far, it's been enough to drive oil prices from close to $95 a barrel at the start of the month to around $73 today. Investors are betting that we'll see increased supply of oil through the Straits of Hormuz. Although it'll take some time for that to happen, if the agreement does hold and petrol prices fall, that should provide some welcome relief for consumers over the coming months. On the policy side, we saw some slight differences of approach. In the US, we got a chance to hear from the new head of the US Central Bank, Kevin Warsh. In general, the message was quite conservative. Warsh is focused on the fact that US inflation is running above target and reiterated his focus on keeping inflation low. The US Federal Reserve kept its policy interest rate unchanged, but indicated that they expected to raise rates at some point before the end of the year. In Europe, we saw the European Central Bank raise rates for the first time since 2023. The ECB raised its estimate for inflation for this year on the back of higher oil prices and chose to act. The Bank of England took a more lenient view. Policymakers there left rates unchanged, although 2 of the 9 voters did favour a hike. They also highlighted the impact of higher oil prices. With oil prices coming down now, and growth still pretty anemic in the UK and Europe, we're not expecting to see many interest rate hikes there. The ECB rate hike that we've just seen may even be the only one we see in the Eurozone this year. Finally, on the equity side, we saw tech companies raise a lot of capital from investors during June. The SpaceX IPO was a high point, the largest IPO in history, at what we thought was quite an optimistic valuation. Shortly afterwards, SpaceX also raised another $25 billion of debt. We also saw Alphabet, the owner of Google, raise $85 billion from equity investors. Tech companies continue to invest aggressively on artificial intelligence, and that's something that has driven not just the sector, but the global economy overall. We think that AI can have a profound impact on the global economy and society over the coming years, but expectations are already high. We've seen strong performance and rising volatility in some tech-heavy equity markets, particularly Korea. For now, we've kept our positioning unchanged, with a slight tilt towards technology across many portfolios. But it's something we'll continue to monitor closely. Thank you for watching, and look forward to speaking with you again soon.